Just a quick review. In our monetary policy statement of April 2016, we said we would watch macroeconomic and financial developments in the months ahead with a view to responding as space opens up. Now, incoming data since then show a sharper than anticipated upsurge in inflationary pressures emanating from a number of food items, as well as a rise in commodity prices. Now, we expect that a strong monsoon, continued astute food management, as well as steady expansion in supply capacity, especially in services, could help offset these upward pressures. But given the uncertainties, the Reserve Bank will stay on hold. However, the stance of monetary policy remains accommodative, and we will monitor macroeconomic and financial developments for any further scope for policy action. We also noted that the transmission of policy into bank lending rates still remains work in progress. We will shortly review the operation of the marginal cost lending rate framework to iron out any issues, and we also believe that timely capital infusion into constrained public sector banks will also aid credit flows. Now, I want to talk about a few other concerns that have been left out of the policy statement. On liquidity, there have been two big concerns. First, on the maturing FCNR-B deposits. Our sense is that the leveraged portion of those deposits, people have borrowed to invest in FCNR-B deposits, that leveraged portion will not be renewed. Therefore, there could be outflows possibly of the order of $20 billion or so. Now, we have covered these outflows in the forward markets, and before the maturation of the deposits, we will take some advanced deliveries in the lead up to the maturity. Now, some counterparties that we have contracts with are apprehensive that they may not be able to deliver easily on the dollars we are owed, and hence there may be some episodes of dollar shortage in the market going forward. This is something we will monitor. We may supply dollars in case of extreme volatility, but no one should take this for granted. But for sure, we have plenty of dollars that we can supply if necessary. We are also committed to supply short-term rupee liquidity to the extent needed to support our monetary stance. The second concern on liquidity has been a question about how long we propose to take to move from a situation of systemic liquidity deficit to one of close to neutrality. Now, this is something that depends on the market and external conditions. As you know, we've already infused a fair amount of durable liquidity into the markets. In addition, we are seeing some reduction in outstanding cash balances. We will not commit to a time frame by which we will move to a neutral position, but we will be opportunistic in moving the system towards that goal. Finally, on the bank cleanup, we are working together with the government on facilitating the process. There are discussions going on mechanisms that will leave projects with the right capital structures as well as access to credit, with also some incentives for promoters to earn their way out of difficulty. SEBI is also being consulted on these issues. There's also some talk of a variety of funds to invest in stress situations. However, and let me emphasize this, there is no intent to go back to the days of forbearance or reverse the move towards transparent bank balance sheets. Let me stop there, and we can take questions now.
Thank you, sir. Supriya?
Good afternoon, Governor. Good morning, Governor. The question that I want to ask you is a takeaway from the policy. It seems to me that you are being a little hawkish on inflation. So is that reading correct? Because a lot of what has been said in the policy as far as the April forecast is concerned, you've said there's an upside bias to it now. You've said there's inflationary pressure emanating from food and commodity prices. The question that one would want to ask you at this stage is there a probability of the 5% target being revised upwards? That's point number one. And point number two, a lot of the heavy lifting is expected to be done by the monsoon. So are we expecting a pause in the August and the October policy as well? That's one part of the question. And the second part of the question is commodity.
Okay.
One second. The commodity prices that you spoke about, how has that changed the dynamics of both monetary and fiscal policy? And if you give me the liberty of asking you a third question, there's too much noise about...
Later.
All right.
Look, that's a lot of, those are a lot of questions. Look, all we are saying is that relative to our April stance, the data that came in surprised on the upside. I don't think there's any news about that. The inflation reading in April was higher than anybody in the markets or we expected. Now, going forward, we have to see how it pans out. It is 1 month's readings. We have to see how, as you said, the monsoon plays out, how that affects food prices. We have to look at supply management by the government. So a variety of factors will come into play. And I wouldn't term, I hate these bird analogies, hawkish, dovish, etc. I would just say it's a realistic assessment of the data that have come in. There are potential disinflationary pressures. There are also potential inflationary pressures. The net effect is we've put a little more weight on upside risk to inflation, but we have to wait and see. The target is obviously 5% by March 2017. That target is there for us to attain, and we have to figure out how to attain it.
Have disinflationary pressures gone down?
I wouldn't say that. I mean, there are, again, the monsoon could be a source of disinflationary pressure if some salient prices come down rapidly. That could also bring down expectations. Expectations are moving about a little bit. So we have to see.
Shobna?
Shobna from Financial Express. So you said transmission is work in progress. So could you give us some sense of how much more you're expecting now that the marginal cost of funding rate is in place?
Well, it's early days yet. I mean, this has been in place for about a month. We have to see how it transmits into lending rates. There's a MCLR, and then the banks have to add a spread to it. And we have to see how that moves. So I think it's going to take a little while before we can assess fully whether it has the effect intended. So,
Lata?
Lata Venkatesh from CNBC TV 18. Governor, you said you began the statement how long we take to neutrality. If you can flesh out that statement a little more. In July, because of the redemptions, we may anyway reach neutrality. Will you continue with OMOs to make up for the backlog of deficit? So do we reach neutrality early? And more importantly, the market's terribly worried about passing on rates or even yields because of the coming FCNRB deposits that will leg it out in September, October. The bigger worry is about rupee liquidity. You will give the dollars to the banks, but then you will suck out rupee liquidity. So if you can detail the game plan of the Reserve Bank so that the market's worries are lessened. And pardon me, this is not to embarrass you at all, but if you can tell us anything about whether you will be there during those tense months, September and October, have you been offered and have you refused?
Okay. So let me take questions one at a time. You asked about liquidity. I said something about liquidity, I think, when you were outside the room. So we will monitor both dollar and rupee liquidity and act appropriately. I think as far as our ability to act, there should be no question. At the same time, we don't want to encourage complacency on the part of people who've sold us dollars, assuming we will come in when they can't provide the dollars to us and bail them out. That's not the intent at all.
Rupee liquidity.
Rupee liquidity, we will always provide what the market requires. That we're committed to. Okay? Now, as far as this separation between long-term liquidity and short-term liquidity goes. And the idea to move long-term liquidity to a neutral position, that will take some time. I think we may find periods when the market is not borrowing from us. But that doesn't necessarily mean the long-term liquidity is in balance at that point, because it could be a period of surplus. So we will have to achieve that over a period of time. It's something that we will work on. I can't give you a date by which we will achieve that. As said, we will be opportunistic in getting there.
Like, is it 2016? Is it FY17?
Look,
is it first half of 2016?
Last time this question was asked, I said, here's a way we could do it in 8 months. But I don't know. It depends on how market conditions evolve. So let's see. Oh, okay.
So you had the choice of answering that question at the end.
Yeah,
of the
you know, I have a prepared statement on that. As far as the question of my continuing in this position after September 4th goes, it would be cruel of me to spoil the fun the press is having with all its speculation. I am personally intrigued by all the letters I'm supposed to have written. Seriously, in all such cases, a decision is reached after discussion between the government and the incumbent. I'm sure you will know when there is news. I cannot do better than point you to the statements of the Finance Minister and the Prime Minister on this. That's all I have to say.
Okay. Next question from Aparna.
Sir, Aparna from Mint. My first question is on the stressed asset resolution.
We go one question by one question.
Okay, so this will be my first question.
Somebody set a pattern for multiple questions.
Yes.
Supriya.
Yes.
So my question is on stressed asset resolution that the RBI is working with the government. So in the previous, when the stressed asset was discussed, you had reservations of a bad bank kind of structure. Is the stressed asset fund which is proposed by the government different from the bad bank? Are you okay with what the government is proposing? And are there any contours, or would you like to share some more details on how this would come about?
No, there are a variety of stressed asset funds one could think of. For example, one would be a lending fund. That's not going to take assets off the banks. It's going to lend into stressed situations. So take a project which has already got loans from the banks, but which needs more funding. You could lend into that, right? And then there are situations where you want to buy the asset. That looks more like a bad bank. And there the key question is at what price? I think there are lots of ideas floating around as to how price will be determined, as well as how the banks may feel confident in selling at that price. We have to see if, in fact, it works out.
You had issues.
The issue is not for me to be comfortable. The issue is for banks to be comfortable in selling at that price, and for the stressed asset fund to pay a price which it thinks is appropriate. That meeting of the two is a big issue which needs to be resolved, right? Banks want to sell at a price which typically ARCs don't want to buy at. Now, how do we bridge that gap is something we have to wait and see.
Pradeep?
दो स्टेटमेंट जो आपने अभी दिए उससे मुझे लगता है रुपए पे काफ़ी प्रेशर ऑलरेडी होगा, हालांकि हम लोग यहाँ हैं तो मुझे पता नहीं। एक आपने कहा कि सम काउंटर पार्टीज में नॉट बी एबल टू सप्लाई डॉलर्स, इससे आपका क्या?
There is an apprehension that some counterparties have expressed that others may not be able to supply dollars, or they may not find that they can raise dollars in time.
तो इसका मतलब यह है कि डॉलर के लिए उस समय शायद डिमांड काफ़ी ज़्यादा बढ़ जाएगी और एक रुपये पे प्रेशर हो सकता है। दूसरी बात आपने ये कहा कि वी विल प्रोवाइड डॉलर बट इट शुड नॉट बी टेकन फॉर ग्रांटेड। तो अगेन आप, मुझे लगता है कि रुपी में एक डिप्रिसिएशन का दरअसल आउटलुक या संकेत दे रहे हैं?
नहीं, we have no desire to move the rupee in any direction. At the same time, if people have contracted to supply us dollars, all we are saying is they shouldn't rely on us bailing them out and us supplying them the dollars that they're going to supply us, right? So they should be a little careful. They should perhaps take, enter into appropriate contracts.
तो आप मार्केट पार्टिसिपेंट्स को हेजिंग के लिए एक सिग्नल दे रहे हैं? आपका मैसेज क्या है?
No, all I'm saying is that maybe Khan Sahib has a better way of saying this than I have.
जैसा गवर्नर साहब ने अभी बताया आपको, हम पूरा प्रतिबद्ध हैं कि रुपया का लिक्विडिटी और डॉलर लिक्विडिटी को जिस तरह से संभाला जाएगा मार्केट को, उसके लिए हम प्रतिबद्ध हैं। और मार्केट में जो वॉलेटिलिटी हुआ है उसको कंटेन करने के लिए हम प्रतिबद्ध हैं। तो उसमें हम लोग ने जैसा कई प्रेस में और मीडिया में इसके बारे में काफ़ी चर्चा हो रही है। थोड़े बैंक के कुछ ना कुछ प्रॉब्लम आ सकते हैं जो गवर्नर साहब ने कहा, लेकिन सिस्टम वाइड हम अभी तक जो हमारा जो अनुमान है, सिस्टम वाइड इसका कोई ज़्यादा असर गिरने वाला नहीं है, क्योंकि हमारा फॉरवर्ड मैच है। और जो छोटा मोटा प्रॉब्लम जहाँ होगा, हमारे पास इतना साधन है, वो छोटा मोटा प्रॉब्लम को हम सॉल्व कर सकते हैं।
Anup has a related question.
Sir, Anup here from Business Standard. So this is related to, you said that some of the counterparties, they may not be able to supply dollars. But what kind of counterparties are they? If they have entered into a contract, they have to oblige you.
No, so let me give you some of the possibilities that people have outlined to us. Okay. Now again, let me emphasize these are hypothetical possibilities, and we are just taking extreme precautions that we understand all the possibilities and are prepared for it. The hypothetical possibility is an exporter who has committed to pay dollars to the bank, which has then committed to giving it to us through the forward contract it has supplied to us. Suddenly the exporter finds he wants to roll over the contract. If he rolls over the contract, the bank doesn't get the dollars. Then the bank has to go out and buy the dollars in the market. So the bank is hedged, but it just doesn't have dollars at that point in time. And so the bank says, look, we need to buy dollars. It goes into the market to buy dollars. Because all these deposits are maturing at the same time, we may find that there is a lot of demand for dollars at that point. All we are saying is we're going to monitor that process. We have enough dollars to supply if need be, but we also urge those who have committed to supply us dollars to take sort of cognizance of that position, that we're not going to make sure that they make no losses in the process. We don't want to create moral hazard in the system.
So you have already sold the dollar in the past to them?
We bought the dollar from them.
They
have to supply us dollars.
Right.
And they may find that their counterparty doesn't supply them dollars. There's a chain here.
But sir, will you contemplate penalizing them if they don't honor
this
their contract?
This is not about penalties. The penalty already exists. They have to buy dollars at high cost in the market.
Okay.
So we are just telling them, be aware of what you owe, as well as the liquidity of your counterparties. And we have 3-4 months. This thing is spread over time, and we will certainly monitor to make sure there aren't extremes. We will intervene to reduce extreme volatility.
Okay.
But we are not going to, we would urge people not to believe that we'll bail them out of their responsibilities.
Thank you.
Okay, Govardhan.
You mentioned that RBI will stay on hold, but the stance remains accommodative. But these are kind of, what's a militate decisions. So what is being on hold and being on accommodative? So either it can be accommodative or hold. Is it and again the statement is full of possibilities of inflation spiking. So does that mean that there is more weightage on hold rather than accommodative, and probably you may have a turn.
See, that's something you have to keep guessing. What weight? Really, what we are saying is that we haven't shifted stance to either a neutral stance or a tightening stance. We are still in accommodative. That means we're looking for room to ease. If that room opens up, we'll be able to ease. Now, I can't tell you because I told you there's lots of uncertainty around this depending on all the factors I've laid out. But broadly, we are still in easing mode.
And then again, a broader question on, so when you took charge in September 2013, you laid out a short-term plan for RBI, what you wanted to do. So if you have to assess as to what all you have delivered on and what is the unfinished agenda for you.
I think if you look at what was listed in that initial plan, you would find that most of it has been delivered on. If you ask me what we need to do going forward, one is, of course, move inflation towards what the Urjit Patel Committee report suggested and what is in our framework with the government, more to a comfort level in the band. We are already in the band, but to a greater comfort level. The second is cleaning up the bank balance sheets so that they can fund growth. That's extremely important. I think those are the big parts of the agenda. But on the reform side, those are sort of the short-term part of the agenda. On the reform side, clearly market development, especially fostering a corporate bond market. And this is something SEBI chairman and I had a discussion just this weekend. And we intend to move as fast as we can to try and remove impediments in this process. But also, other markets to increase participation. Khan Saab is working on many of those issues. And finally, financial inclusion. I think it's an unfinished agenda. We need to do a lot, including work on the base of the Pradhan Mantri Jan Dhan Yojana accounts to build that last mile so that they can be used more effectively. Make lending to small enterprises and medium enterprises more effective. Perhaps through these through these small finance banks which are being set up, but through other kinds of institutional reforms, such as collateral registries, such as a SME loan database, things like that.
Gabriele?
Good morning. Gabriele Perusini from the Wall Street Journal. Governor, you talk about oil and oil prices quite a bit in your statement. Now, another reflection of relatively lower oil prices from those we saw a couple of years ago is that there is an ongoing economic crisis in Gulf countries, and that reverberates upon India through remittances, which have started falling. Do you have any thought on that, and how do you see the dynamic of remittances going forward?
Thank you. On the oil price at the levels at which we are, one doesn't expect remittances to be affected adversely going forward. They have fallen, but by a relatively small amount. And about half of the remittances come from the Middle East, the 5 oil exporting countries, but the other half doesn't. So I don't think the impact is universal. In many ways, I think an oil price of between 40 and 50 is a sweet spot. It's something that we can absorb with a relatively low current account deficit. The remittances are protected to some extent. So at the moment, it's not a cause for worry. Just one more point, that some of the spike that we have seen recently in the oil price is because of some short-term issues like the Canada fires and some disruptions which are considered temporary. But it's a mug's game predicting oil prices. So, but I don't think it's a cause for concern at these levels.
Bijoy?
So my question's on LCR. One is, as the LCR regime, takes, we've already moved to 70%. Will there be further carve-outs that will need to be done? Will there be a midterm review of further carve-outs within the SLR to accommodate that? Also, connected question is that Basel has a differing view on state development loans. What is the RBI stance on treatment of state development loans within the LCR framework? And additionally, one question on the asset quality review. You had mentioned March 2017. Do you expect banks to increase the provisioning that they are doing as they move forward? Because they've only done the 15% provisioning at this point of time. Do you expect banks to accelerate some of the provisioning, maybe improve their provision coverage ratio as it goes forward?
Let me ask Mr. Mundra to respond to the provisioning question. On the issue of LCR, I mean, clearly it depends on the pace at which SLR is brought down. And what we don't want is to impose a double burden on the banks. That is, they maintain SLR as well as have LCR. So when appropriate, we will make adjustments so that they're not subject to two different standards. Essentially, if SLR is enough to fulfill the LCR requirement, we don't want to impose double requirements on them. So we'll look at that. On state development loans, our stance at Basel has been that these haven't defaulted and should be treated as risk-free sovereigns. Now, of course, it's important that that continue and that no state think about defaulting on the SDLs. I don't think there's any prospect of that. But also, we have to fight that case. It still is a case that we have to make at Basel.
Yeah. See, on the provisioning, there are two aspects. One, you mentioned that they have just made 15%. Yes, fine, 15%. But even in the existing framework, there is a natural progression over a period of time. So it doesn't move quarter to quarter, not expected to move quarter to quarter. And it's a dynamic situation. As we have mentioned, that large part of this they were to recognize in the quarter of December and March, which they have done. This year, we have suggested them to utilize to address the potential weaknesses, which would, of course, entail making some provision. So I think the additional provisioning requirement during the year would come from identifying and addressing those situations, whereas the cases where the provisioning has already been done would move forward. Now, moving forward, as I mentioned, is a dynamic situation. It would be reasonable to expect that some of the cases where banks are able to move towards the resolution, they would also be able to free some of the provisioning. But having said all this, though at this point of time, we have not prescribed any benchmark of provisioning which used to be, but we would certainly encourage the bank on their own volition to keep on improving their PCR as their financial position permits them to do so.
Ritu has related questions.
I had this is Ritu from CNBC. A related question on NPA management. I mean, provisioning levels, additional capital requirements are going up. Capital is scarce with banks. So when you're talking about setting up a stressed asset funds, how much capital contribution are you expecting from the banks, or will the bulk of it come from NIIF? Could you throw some more clarity on that?
First, we are not setting up any stressed asset fund. All we've been asked is, do you think this structure is reasonable? What structure are you okay with? And what kinds of ownership, etc., are you comfortable with? So we've given our views on those. Ultimately, it's the government as well as other investors who will be coming together along with the banks to set up such funds. In our view, majority ownership by the banks of any such fund is probably not wise or warranted. And perhaps some form of minority ownership with a number of other players coming in addition to the government, to provide capacity, especially in management of stressed assets, would be appropriate.
But could you give us any sense on the size of this fund that banks will set up with the government?
I think that question you should ask the government. It's more their discussions which will have relevance here.
Governor, if I may take one more question on the MCLR rates. What are the impediments you see to banks transmitting rate cuts at this point of time, after you introducing the MCLR, after the government small saving cuts? You also said you're looking to review the MCLR framework. what specifically are you looking to tweak that will enable banks to transmit faster?
Well, review would suggest that we need to assess what are the aspects that are working, where are the aspects there are rigidities that we have to take further action on. So I can't prejudge what we will find. In general, I think there is a paucity to some extent of credit demand from the usual sources, which is why the banks are not in a great hurry to reduce rates either. They seem to be suggesting we're not going to attract a whole lot of new credit if we reduce rates, so why not stay with the existing borrowers and so on. That was why we moved from the base rate to the MCLR, because that would mean a more automatic reduction in rates when deposit rates came down. Now, what we've seen in April, May is that while credit growth hasn't been very strong in those 2 months, deposit growth has been fairly strong. So my hope is that as deposits keep building up on the liability side, banks then find more of a need to make those deposits go to work. Other than through investment in government securities, they actually start making more loans. And they look for borrowers and therefore start reducing rates more. This is why, to an earlier question about MCLR review, etc., we need to give it a little bit of time, which is why I don't want to pronounce judgment immediately. But we will see as we get a little bit of experience, is it working as advertised? And are the banks then passing through rates into lower rates for customers? We don't want to interfere in a contractual process, in the interim. That will create all sorts of difficulties. The base rate, a number of contracts have been written on the base rate, at some point in time. For us to say the base rate is going to end today would not be appropriate. What we've said is incrementally loans should be made on marginal cost. Mundra-sam would like to say something.
And while there may not be a sunset, but a hat is provided, so they can, people can shield themselves. So there is a enabling clause for the customers to move from the one regime to the other regime. So from BPLR to base rate to MCLR, and there is a whole framework for that. So that enablement is there, while maintaining the sanctity of the contract which has already been entered into. Not necessarily. Yes, there is an element of negotiation involved, but ultimately is a product of competition, and I think that works better than anything else.
I think we should emphasize that last point, that ultimately it will be competition which forces the banks into this. Of course, some banks have stressed balance sheets, they're focused on that rather than on new loans, etc. But over time, the healthy banks will generate the lending, which I think is very important, and that's one reason why we want to get all the banks back to health.
Karuna, can we quickly check if there are questions outside?
Sure. Participants on the audio bridge, if you'd like to ask a question, you may press star and 1.
No questions. I think it's back to you guys.
Okay.
I have one question here from the line of Raghuram Rajan from Hindu Business Line. Please go ahead.
I can see that.
I had 2 questions if I can squeeze in. The one was on the issue of transmission as we've been discussing. Time and again we have seen that there has been a disparity in terms of how lending rate cuts or increases have been passed to old borrowers as well as new borrowers. So even under the MCLR regime, you see that it's the new borrowers who are incrementally benefiting from a reduction in MCLR rather than the older ones.
Is that the question?
So is there any way that this divergence can be ironed out going ahead in the new system?
I don't know that it's for the RBI to iron out the divergence. If somebody is locked into a loan, they did that at the beginning. So for us to suddenly break contracts would not be appropriate. But if the loan allows them to move on to something else, clearly they can do that. Munda Saab, would you like to add?
I'll just add one dimension to it. See, there are two situations. One, where are the existing borrowers who are under a base rate regime and then the MCLR is introduced. And second, within MCLR, the borrowers come in, and as the MCLR moves further, the borrowers earlier contacted whether they remain discriminated. Within MCLR framework, there is already a provision. So there is a dynamic review of prices, and window at the best can be 1 year, where between the two set of borrowers a kind of differentiation can exist, but not after that. So in the new framework, this has already been taken care of. As far as the issue between the base rate and MCLR is concerned, I think we have already dealt with while replying to the previous question.
Okay. If I can just add one more question.
Radhika will restrict to one question per person. We have extended the time. Thank you very much. Last question from this room. No, you have already asked one question, so maybe Sajid? Sorry.
Governor, this is Sajid here from Bloomberg Quint. You spoke in the policy about the global growth, which is very uneven and is not able to get traction. And now with Brexit also coming in, what do you expect any volatility because of that? And secondly, the payment bank licenses have been given, and since then 3 players have withdrawn from that. I wanted your view on the entire model of payment bank and what's hampering players to get into it or prompting them to withdraw from it.
Yeah. First on potential risks, I don't think you can rule out Brexit as a source of volatility. If in fact it happened, the people in Britain vote for exiting, there will be a lot of turmoil in markets. A lot of financial institutions have headquarters in the UK. There could possibly be some turmoil in financial markets, and we can't rule that out. That said, as I've said repeatedly, we have 3 defenses: good policy. We have longer-term liabilities in this country. We haven't contracted too many short-term liabilities, and we have a reasonable amount of reserves, all of which should help us weather volatility in financial markets. So yes, we're watching what happens. We're not being complacent about it. At the same time, I think we should be able to weather any volatility that emerges. The second question was payment banks. Now, I think one has to be sort of careful about this because we gave out licenses to anybody we thought had the appropriate qualifications to run a payment bank. Now, we presume they did they also analyzed potential business prospects. Now, after doing further analysis and seeing the other players who are coming in, some of them have decided to back out. My sense is that the payment bank works particularly well for those who already have a base of operations and many contact points, and therefore can build upon that. And the classic example is somebody affiliated with a mobile company with many kiosks through which you can do cash in, cash out. So the first license is already with Airtel, and I would presume other mobile operators would also go the full length. We are not overly perturbed that some people decided after analysis that they would not go forward. In fact, it suggests that the licensing has been adequately liberal and that we have a variety of players coming in. I think that is as it should be, that people will decide whether they should come in or not. Now, I think Mundra Saab has made this point that people should also acknowledge the fact that it imposed some costs on the assessee, or the assessor, I should say, to go through these applications. We ask for a lot of information from a variety of government agencies. So going forward, we have to find some way that people devote adequate time to understanding whether in fact they should apply or not. The days where licenses were rationed and therefore you had to get in the license because otherwise you wouldn't get it down the line, we hope is in the past. Therefore, when you go forward, do a proper assessment. Don't just go for a license because it's a valuable property to have, but instead do the due diligence on your own, and when you apply, it should be with the intent of fully carrying out. Again, that said, we're not overly perturbed that some people decided to back out.
So that's it from our side. So.
Well, thank you very much.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.